If you're new to the futures market and in particular shown some interest in trading crude oil, then stick around as I show you some of the basics that you will need to understand before you get started. Before you trade any market, it could be crude oil, it could be forex, or whatever the case might be, a particular stock. It's really important that you understand the outside influences that could affect the price of that stock, forex pair, in our case crude oil. So with crude oil, outside news events or geopolitical events like wars, OPEC meetings, or your weekly crude oil inventory reports are all different influences, outside influences that could affect the price of crude oil. So that's definitely one thing you first would need to go and check out, is have a good data feed, or a news feed, where you can basically go and check out if there's any news that will affect the crude oil market. I'm mostly going to focus on going through the actual contract specs that's involved with crude oil before you actually trade it, also that you know the risks involved with trading crude oil. All right. So I'm using NinjaTrader 8 here, and you can see I've got a crude oil chart open. It's actually set on the most liquid new front month, which is the January contract, already end of the year, so that's January 24, next year's contract on crude oil. And I'm just using a 60-minute chart, could be any chart for that matter. But I'm going to be using this chart just to go through some of the tick values, dollar value, and all that sort of stuff, and also show you, very importantly, where you can find additional information about crude oil or any other futures market for that matter. So the first thing you want to do is go over to tools over here. And if you click on instruments, you'll be presented with all of the instruments on the NinjaTrader 8 platform. It's already set under futures here. You can go and select a symbol for crude oil, which is CL, and double click on that, or you can just scroll down and go find that symbol. You also got the description of what it is. Since we already know that crude oil is CL, it is a future, and there we go, it says crude oil futures. You double click on that, double left click, and you'll get a new window that pops up. Now this is where all the information or the basic trading information will be captured for this particular instrument. In our case, we can see that the symbol name is CL, it is a future, and you'll see on the right hand side here with this chart that I do have open that the currency that it's trading in is US dollars. So price is currently at $76.44, and that actually refers to a barrel of oil. $76.44 per barrel. Okay. Then we got point value, and that 1,000 here basically refers to if price would, for example, have to move from $75 down to 74. That would be 1 point or $1. That would be a total value of $1,000 per contract. Again, I'm going to be explaining this more in layman's term in just a second. All right. Then it trades on the NYMEX energy exchange, where NYMEX stands for the New York Mercantile Exchange, and that ETH stands for electronic trading hours. All right. And then we got tick size, very importantly, 0.01. That can also refer to the smallest increment of what this particular futures market, in our case again, crude oil, moves in. So you can see, for example, it's at 76.49. Now, if price had to go one tick up to, or like it did now, to 76.47, that's a 1 cent move. Now, for each 1 cent that the market moves, and as we in futures refer to it as tick size, that's got a total value of $10. So very, very, very important to know that as a beginner trader. So if you're going to get involved in crude oil, there's some instances where price can move very quickly during a news event or anything that moves this market, and it could very easily move 1 point or $1, $2, $3, $4 in very, very quick succession. So knowing what your tick size is very important to also figure out what your total risk would be, especially if you're using a strategy where to place your stop and so forth. So because it's volatile, that $10 per tick can very quickly go your favor, or it can't as well, or go against you, if that makes sense. All right. Again, description, crude oil futures. And then this symbol map basically just refers to here on NinjaTrader 8 what different brokerage would which symbols they would use, if that makes sense. So on NinjaTrader 8, I'm just going to stick with CL. Now, very importantly here is this little URL here. If you go over to there and you click on it, I'm just going to bring that screen over and get rid of these windows for now. It will automatically open the Chicago Merchant Charles Exchange's website for that particular instrument, again for us on Crude Oil. This code that you see on the left hand here is basically what's called the front month, or the most liquid month that traders are actually trading. And this F here actually refers to the expiry month, and F, I believe, is January. All right, if you're not familiar with this, this is exactly why I am giving you this information, so you can go through all of these specs. And then we're going to look at the calendar as well in just a second, to so that you understand 100% what it is you're looking at before you trade. All right, so contract unit, you're trading, if you're trading one contract, you're actually physically trading, not physically, electronically trading 1,000 barrels. Again, it's quoted in US dollars. Again, that information was present by opening those windows on the instrument list, right? Importantly, the trading hours. So the Globex session refers to the overnight session, mostly when the US is sleeping, right? So the start of the trading week actually starts on a Sunday and it ends on a Friday. So on Sunday, it will open at 5 p.m. and this is quoted in Central Time, and it will close on Friday at 4 p.m. Right, so it's almost a 24-hour market, except for a 60-minute break that happens each day at 4 p.m. Central Time. So very important to take note of that. This TAS you don't really have to worry about as a retail trader. And the other thing I just wanted to show you, yeah, very importantly, minimum price fluctuation. So for every 1 cent move or 1 tick move, that is got a value of $10. All right. Then there we go. We got different product codes. We're just going to focus on crude oil, since that's the one that mostly everyone knows about. And that's pretty much all you really need to know here. If you want to start off, you can go and do your own homework and read through all of these other useful informations over here. Margins might be important, especially if you trading the full contract, like the crude oil contract. What would be your margin requirements? And obviously that can affect the account size that you have and so forth. All right, so it will show you the margin requirements for all of that. Again, also good to double check this with your brokerage to see what it would be the margin requirements to open one contract. If you're holding overnight, for example, if your brokerage does allow that, then that margin requirement might actually become more. Right, the other one that's really important is your calendar. And since there are different contract months for all futures for that matter, some contracts, what we call roll over or expire every 3 months or so, whereas your crude oil expires every single month. So there's a contract for each month. Now, this might be something that not many traders know about. This is the product code. The December one actually already ended now, and the reason for that is that the final settlement for that contract already happened on the 20th of November 2023. All right. And what's really cool to know here is that you could have started trading the December 2023 contract back on the 21st of November 2014 already. It's not to say there will be much liquidity on that contract, but this is also what futures are all about, right? You can actually trade front month contracts or any contract that's already been listed in the future. All right, so it's very important that you go and understand when the last trading day for each particular contract will be. All right, so that you don't basically hold a position into a contract expiry. Luckily, these days, all of your brokers will mostly let you know that the contract is expiring. A lot of your platforms like NinjaTrader 8, for example, if you've been trading the December 2023 contract, you probably would have a week before got a notification or a warning that it's time to roll your contract and then trade the next month contract, which in our case would be the January 2024 contract when I shot this video. So that's also very important to understand your contract months. When's the first trading day? Not that important, but especially when the last trading day would be, where you would then need to be out of that contract and decide to start trading in the next contract. So I know most retail traders are just day traders, scalping, whatever the case might be. So for them, they'll mostly be focused on what we call trading the front month, because that's where most of the liquidity will be. and just know when these contracts expire. It's always good to know that. Okay, so all of that information for all of the futures markets, actually, you can go and find here on the CME Group website. Again, you can just go that way that I've shown you on the NinjaTrader 8 platform by going to Tools, Instruments. We just use in this video Crude Oil, and double click on it, and there you'll have a quick overview of all of the things you need to know before you do start trading. Again, very importantly, know what the tick size is and the value per tick before you trade it. All right, and then most of them, I believe, has got that URL. You can just go and click that, and if you want more in-depth contract specs and so forth, you can go ahead and click on that over there. Right, so that in a nutshell is just the basics you really need to know to trade crude oil. Know that it can be volatile. Know that there could be external news events, global events that can also affect the price. Here is a really good example recently of, this is now on a 1 hour time frame, where within 1 hour price fell from about 76.27 all the way to about 73.98. So that is almost a 1, 2, let's count these bars here in as well, from 76 all the way to 72. Let's call it $4 that contract has fallen in a very short period of time. I'm just using an example just to show you that it can be volatile, and that's about $4,000 per contract. Now, obviously, you probably would have been out of that if you were on the wrong side of this. You traded long, but some traders don't understand when they get involved with trading crude oil, any market for that matter, of what they're actually risking when they're opening a contract, especially when it comes to futures. So if you were on the right side of this and held, that would be in a quick $4,000 to the downside. Also why strategies are very important, right? All right, so thanks for watching. Hope you enjoyed, and I'll see you again in the next one. Take care and goodbye.